Hi everybody. Uh, this video is the second video for this topic 3 and 4. In this video, I will explain about the step 5 in the accounting cycle, which is the adjusting entries. Okay, first thing, adjusting entries are entries required at the end of each accounting period to adjust the accounts to their proper amounts. Okay, remember this. The main purpose of doing adjusting entries is to follow matching principle. The matching principle says if you want to calculate profit for one accounting year, you have to match the revenue of that year with the expenses of that year only. That is a simple way to understand the matching principle. Okay, there are at least four types of adjusting entries. The first one is the unrecorded receivables. The second one is the unrecorded liabilities. The third one is prepaid expenses. Number 4 is the unearned revenues. So we will see each of these type of adjusting entries in the later slides. Okay, remember each adjusting entry involves at least one income statement account and one balance sheet account. So remember, in the income statement there are two types of accounts, revenue accounts and expenses accounts. In the balance sheet there are three accounts, assets accounts, liabilities accounts, and equity accounts. Okay, when you do the adjusting entries, you have to follow these three steps. The first step is you have to identify the original entries that were made. This step is relevant for adjusting entries for unearned revenues and prepaid expenses only. Okay, the second step is you have to determine the correct balances that should be at the specific point in time. And number 3, then you can do the adjusting entries by following the correct balances, and you do the adjusting entries in the form of journal entry. Okay, let's see the first type of adjusting entry. This is the example for adjusting entries for unrecorded receivables. Okay, receivables is an asset. Receivables means something that your business will receive in the future, so it is an asset. Your business will get something in the future, so it means your business will get benefit in the future, so it is an asset. Okay, you have to assume that this business in this example is your own business. So let's see, your business earns rent revenue of 500 in year 2019, but will not receive the payment until January 10, 2020. Okay, this example is like this. You have a business, you rent a space to somebody. So in this example, you have rented the space in year 2019, but you will be paid only on January 10/2020. Your business has to close accounts at the end of every year. So your business, you have to close the account for your business at 31st of December 2019. So what should you do when you close your account at the 31st of December 2019? So if you have this situation for your own business, then you have to think. You have to think that you have to record this rent revenue. You have to record this rent revenue because it had happened in year 2019. You have to record it. You have to record it even though you will only get paid in year 2020. Why? Because you follow the revenue recognition principle. The principle says you have to recognize or record revenue when it happened, not when you receive cash. Okay, so this is the situation. Then now you know you have to follow the revenue recognition. You know that you have to record the revenue in year 2019. When you close your account at 31st of December, so how will you have to record it? Okay, so when you close your account at 31st of December, the first thing that you do is you know you have to record the revenue. So at the adjusting entry that you do, see here, adjusting entry in the green box, the adjusting entry that you have to do is you record the revenue. So revenue increase, you have to record in the credit side. You record the revenue. Credit account rent revenue 500, but you have not received the 500 cash yet, isn't it? So that 500 cash is a receivable, something that your business will get in the future. So receivable is an asset. When an asset increases, you have to debit it. So that's why the adjusting entry for this example is you record the revenue, credit the revenue 500, and then you record the asset. The name of the asset is rent receivable 500. Rent receivable is an asset which is something that your business will get in the future, in the year 2020. Okay, this is the second type of adjusting entry. The name of this adjusting entry is unrecorded liabilities. Liabilities means something that your business has to pay in the future. Okay, so let's see this. Let's assume that this business is yours. Your business has calculated property taxes of 1,000 for year 2019, but you will only pay this tax on January 5, 2020. So this is your business. You close your account at 31st of December. Okay, when you close your account at 31st of December, and then you see this situation, so what will you do? You have to think. Okay, you have to think. In accounting, tax is an expense. You have a business. If you have to pay tax, the tax is recorded as an expense for your business. For this situation, in year 2019, you have calculated that you have to pay property taxes of 1,000, but you do not pay yet. You will pay in the future, in the year 2020. You close account at 31st of December 2019. What should you do? Okay, you remember, like revenue, as an expense also has to be recorded when it happened, not when you pay the amount. So this tax, property taxes, is for year 2019. So you have to record it in year 2019. So how to do the adjusting entry? The adjusting entry is in the green box. So the thing that you have to do is thing that you have to do is you record the tax expense. So an expense, when an expense increases, you have to record it in the debit side. So first you record the tax expense, debit property tax expense 1,000, and then remember next year you have to pay 1,000. That is a liability. So you have to record the amount in a liability account. The name of the account is the property tax table. So liability increases, you have to credit. See here, the journal entry for the adjusting entries is debit the tax expense, you record the tax, and the second entry is credit the liability, which is the property tax payable account 1,000. Okay, the third type of adjusting entry is adjusting entry for prepaid expenses. Prepaid expenses means you pay expenses in advance. You pay something for the future expense. Okay, let's see the example here. You have a business, and then on 1st of October 2019, your business pays 3,600 for 1 year's rent in advance. So your business pay rental for the future. Your business pay the rental at 1st of October. So if your business pay on the 1st of October for 1 year rental, the rental payment will cover from October 2019 to September 2020, 1 year. Okay, and then on the 31st of December 2019, you close your account. So the question is, when is the adjusting entry that you have to make? Okay, see. So see here. For the prepaid expenses, you have to know the original entry before you can do the adjusting entry. So this is the original entry. The original entry is the record when you pay the 3,600 on the 1st of October. So when you pay the rental on the 1st of October, the entry, the record in the journal is debit account prepaid rent, credit account cash. Prepaid rent is an asset account. You pay something for the future, so you pay the rent on the 1st of October. You can use the building for the next 1 year, so you pay something for the future. It is an asset, so you debit the account. And then at the same time, when you pay the rent, there is a cash out. So cash out is a decrease in asset. When there is a decrease in asset, you have to credit. So debit prepaid rent, credit account cash. That is the original entry that you do at the 1st of October. Now, at the end of the at 31st of December 2019, you have to think how much from this prepaid has become an expense. When you pay, it is an asset because you pay for the future. When you have used the building, at the end of the year, you have to think how much from this 3,600 has become an expense. So if you pay on the 1st of October, so the payment is 3,600 for 1 year rental. So for 1 month, how much is the rental? The rental is 300. 3,600 divided by 12 months. So 1 month, the rental is 300. From October 1st to 31st of December 2019, 3 months has passed. So 3 months means how much? The rental expense. 3 months times $300 per month. So for the 3 months, the rental expense is 900. Okay, 900 for 3 months. So you know, oh, the rental expense is 900. So this is year 2019. You have to record the 900 as an expense in year 2019, not an expense in the year 2020. It is the 900 is an expense in year 2019. So when you know that the rent expense is 900, so you have to do the adjusting entry like the one in the green box. At the 31st of December 2019, you have to record the rent expense because it happened in year 2019. The rent expense that happened in year 2019 is 900. Debit rent expense 900. At the same time, you have to reduce the prepaid expense, the prepaid rent. When you pay the rent, you have prepaid rent of 3,600. At the end of the year, 900 has become an expense, so you have to credit the account prepaid rent 900. So debit rent expense 900, credit prepaid rent 900. Okay, this is the number 4 type of adjusting entry. Okay, the situation is like this. Imagine that this is your business. You have a business, and then on March 1st, 2019, your business received 3,600 for 1 year's rent in advance. So the situation is like this. You have a business, and then you have an empty space. You rent that space to somebody. Okay, when you rent that space to somebody, you will get rent revenue. So in this example, on the 1st of March, the person who rented your space has paid 3,600 for 1 year's rent in advance. So the payment of the receipt of 3,600 covering the period of March 2019 to February 2020. It is 1 year revenue from the space. Okay, on December 31st, you close your account and you have to do an adjusting entry. Okay, the thing is like this. Let's see what is the original entry. What is the journal entry when you receive the 3,600 from the person who rented your space? Okay, the original entry is like this. When you receive 3,600 from the person who rented your space, your record is debit account cash 3,600 because cash goes into your business. So cash goes in or cash increase, you debit account cash 3,600. At the same time, you have to record unearned rent. Unearned rent is a liability account. You receive the cash, but you cannot record it as a revenue yet because you have not rented the building yet. You receive the cash. After you receive the cash, you rented the building or space to the person. So it is a liability. You take somebody else's cash in your hand without providing anything yet. So it is when you receive the cash, you have to record an increase in asset cash. At the same time, an increase in liability called unearned rent. Okay, what should you do at the end of the year? At the end of the year, you have to do an adjusting entry. Okay, so this 3,600 cash you receive from the person who rented your building is for 12 months. So every month it is $300 rent revenue. Okay, because 3,600 divided by 12 is 300. So every month it's supposed to be $300 rent revenue. So how and then when you close your account at 31st of December 2019, you have to calculate how many months the the person has used your space. So from March 1st to 31st of December, it is 10 months. 10 months, the space has been used. So 10 months, each month the rent revenue is 300. 10 months times 300 is 3,000. So 3,000 from the unearned rent of 3,600 has become rent revenue. So you know that the revenue for year 2019 has to be recorded in year 2019. So the adjusting entry is like this. The adjusting entry is like in the green box. First, you have at the 31st of December 2019, first you have to record the rent revenue. So credit rent revenue 3,000. That is the revenue for year 2019. Always remember, account revenue, when it is there is an increase in account revenue, you have to credit the account. So credit account rent revenue 3,000. At the same time, the liability of unearned rent has decreased 3,000. So you debit the account unearned rent 3,000. Liability decrease, you have to debit the account. So account liability unearned rent has to be debited 3,000. Okay, these are the 4 types of adjusting entries we have seen. Examples for each 4 types of adjusting entries. Okay, there are additional adjusting entries. Number 1, you also have to do an adjusting entry for depreciation. Okay, so depreciation is something like this. If you have a business, you will have non-current asset like machinery, equipment, like furniture, building, motor vehicle, etc. These things are non-current asset. For non-current assets, every year you have to calculate depreciations for them. Okay, let's see the explanation related to depreciation. Before you can do or you can calculate the depreciation, you have to know how to record asset acquisition or how to record the purchase of an asset. Okay, remember, if you have a business, when you purchase non-current asset, the value of the non-current asset that you have to record in your journal is the purchase price plus the cost that you have to pay to get the asset. For example, you have to pay sales tax, shipping cost, installation cost. So this has to be included in the value of the non-current asset. For example, let's see here you have a tailor business, and then at one time you purchase a sewing machine. So the situation is like in the green box here. See the wordings below the journal entry. You purchase a sewing machine. The cost for the machine is the price of the machine is 5,450. At the same time, when you purchase the sewing machine, you have to pay 50 for the shipping cost or for the delivery cost. Okay, and then you pay 3,500 cash, and you will pay the supplier 2,000 later. So how to record this? So first, you have to remember the value of the machine that you have to record is the purchase price plus the cost to get or acquire the machine. So the purchase price is 5,450. So the delivery or shipping cost is 50. So in your journal entry, you have to record debit sewing machine 5,500, which is the 5,450 plus 50. Okay, that is the debit. That is the value that you have to record for the sewing machine. And the second thing is when you purchase the machine, there is a cash goes out. you pay the supplier 3,500, so credit account cash 3,500, and then also you owe the supplier 2,000. When you owe the supplier, you record in account payable. So liability account payable increase 2,000, so credit account payable 2,000. Debit sewing machine 5,500, credit account cash 3,500, and credit account payable 2,000. This is the record when you purchase a non-current asset. So as time passes, a non-current asset loses its ability to provide useful services. Okay, this decrease in usefulness is called depreciation. In accounting, we call it depreciation. Or you can say that if you have a non-current asset, when time passes, the value of the asset will decrease. Okay, this year you have this sewing machine 5,500. After 1 year, the value will decrease. After 2 years, the value will become lower. So this is the thing that we said in accounting as depreciation. Actually, there is a longer explanation about depreciation, but to make it easier for you to understand, I just want to say that depreciation is a record about the decrease in the value or the usefulness of a non-current asset over time. Okay, depreciation is that, and then when you want to calculate the depreciation, you have to know about the book value. The book value is the asset's original cost less any accumulated depreciation. We will see that later in the later slide. And then you have to know salvage value. Salvage value is the amount expected to be received when the asset is sold at the end of its useful life. So when if you have a business, when you purchase a non-current asset like a machine, you have to estimate how many years this machine can be used by your business, and you have also to have have to estimate at the end of the useful life how much you can sell this machine. Okay, so the way there are several methods that can be used to calculate depreciation, but here we will cover one method only, which is the straight line method. When you want to calculate the depreciation using straight line method, the formula is in the green box here. The formula is cost of the asset minus salvage value divided by the useful life of the asset. For example, here, let's see, for you purchase a washing machine for your business, $5,000, and then you estimate that the useful life of the machine is 4 years, and then the salvage value is 600. So if you want to calculate the depreciation for year 1, the way to calculate the amount is like this. You use the formula. So the cost is 5,000, the salvage value 600, so 5,000 minus 600 divided by the useful life, so divided by 4 years. So every year the depreciation is $1,100. Okay, this is the way to calculate the depreciation. So and then you have to record this amount in the in your accounting record. So the general journal entry for this depreciation is very simple. You have to memorize this. You have to debit the depreciation expense. Here the amount is 1,100, and then credit the an account called accumulated depreciation 1,100. Okay, just okay, this is the way to do the record for depreciation. You calculate the amount and then you record in this format: debit depreciation expense, credit accumulated depreciation for the asset. Okay, another one that you have to do, I think this is also one type of adjusting entry. Okay, another one is when you have a service business, you will have supplies. Supplies are items that you use, your business use when your business provide services. Okay, so supplies, the thing about supplies is when you have the supplies in your business, they are assets. But when you use the supplies, it become an expense. You have to record it as an expense. Let's say you have a laundry shop. In your laundry shop, there are many detergents, softeners, etc. They are assets. But when you provide a service to a customer, you use these detergents or softeners, etc. The assets become an expense. So there are two accounts related to supplies. Supplies asset and also supplies expense. Okay. Okay, let's see the situation here. Let's say you have a business, and then your surplus account has a balance of 2,000 in the unadjusted trial balance. It means that at the beginning of the year, in your record, you have $2,000 value of supplies. So during the year, some of these supplies have been used. At the end of the year, which is on the December 31st, you found that $760 of supplies are on hand, are left in your business. At the beginning of the year, you have $2,000 supplies, and then during the year you use some supplies. At the end of the year, you see the supplies balance is $760. So when you want to do the adjusted entry for supplies, you have to calculate how much supplies have been used. Okay, in this example, see here the simple calculation here. The supplies balance on the trial balance is 2,000. That is the beginning balance. Balance of the supplies at the beginning of the year. At the end of the year, supplies left equal to $760. So how many supplies have been used during the year? So supplies that have been used during the year is 2,000 minus 760 equal to supplies used equal to 1,240. So it means that during the year, $1,240 of supplies have been used. So like I said earlier, supplies, when they are in your business, they are assets. But when you use them, they become an expense. So if the expense here, if the supplies used here is 1,250, so you have to record that as an expense. So this is the journal entry for supplies. So you have to record the supplies expense. Always remember when an expense increase, you have to debit the account. So debit account supplies expense, and always remember to credit the supplies account the same amount. Here debit supplies expense $1,240, and credit account supplies $1,240. The account that you credited here is supplies account. Supplies account is an asset account. The account that you debit is supplies expense. So debit the supplies expense, credit the supplies asset. There are two accounts for supplies. Always remember, supplies expense and supplies asset. Okay, I have briefly explained to you about the adjusting entries. Here I have some scenarios related to adjusting entries. I will make another video to discuss about this sample question related to adjusting entries. I hope you can follow the idea better. Now you have some knowledge about adjusting entries. Later when I prepare when I make this another video for you, I hope you can follow the idea, and then you can do adjusting entries for a business, for a simple service business. Thank you very much. You can communicate with me in the comment section.